Hi there, today another very important podcast with the title, What Went Wrong with Capitalism? Now that is the name of a book written by Rashir Sharma, who's the head of the Rockefeller Institute. I'm reading it at the moment. I can definitely recommend it. They're two very critical books for anyone who's interested in economics, economic history, money, human behavior, finance, history. It's got it all in there. It really does. Now, you may have seen Rashir Sharma on television. He often appears on Bloomberg, being interviewed by David Weston, right, for Wall Street Week, and also Romain Bostic. It's a very important point, what went wrong with capitalism, because a lot of people feel that capitalism has gone wrong recently, okay, the last 20 odd years. By the same token, some people feel that capitalism is just fine. Some people say that we haven't even tried capitalism yet because the central banks and redistribution through income tax has been too heavy-handed. But most people feel that capitalism hasn't been all that it was cracked up to be. Now, some people may claim, well, and fair enough, that Karl Marx muddied the water with his commentary on economics, because even though he discussed class struggle and political economics, and he quoted that in his forwards to his first volume, Das Kapital, the reality is he was putting forward economic views, right? Saying what he thought could and couldn't work, and what was and wasn't just. Some people might say that Adam Smith's book, The Inquiry into the Wealth of Nations, has been misunderstood, and so that's muddied the water. And certainly Adam Smith's book before that, before The Wealth of Nations, which was The Theory of Moral Sentiments, came out about 10, 12 years before. And look, the 250 anniversary of Adam Smith's book and the American independence is coming up next year in 2026. For those of you who are interested. Now, all those points are well made, and they're fair points, right? But the reality is that there is another problem, which I have spoken about before, that is the main problem with capitalism. And it's not really a problem of capitalism at all. It's a problem of, it's mistaken money, you might call it. The perennial problem of money. Now, the issue is that in the capitalist states that we live in, we have central banks that print money, right? They print the legal tender. By that I mean they digitally create it, and then a mint prints the banknotes and mints the coins. And also they put up and down interest rates to stabilize prices and maximize employment, one or the other, or both, depending on the mandate of the central bank or reserve bank in question, right? So we have decided, even in non-capitalist states, to use money, to use cash as a method of exchange. Now, if you decide to have a nation state based on capitalism, and you decide to have a Federal Reserve or central bank that prints the money, the legal tender, and decides the interest rate so as to maximize employment and stabilize prices as much as possible, then you must do one other thing for the economy to work. And if you don't do it, you will get in a great deal of trouble, and the economy will basically zigzag up and down the corridor like a drunk coming home, bashing into left wall and right wall and crashing along the way. And that one thing is you must have universal basic saving from birth and financial literacy at school. And the reason for that is when someone retires, they need money there, not just to pay the bills in their old age when they stop working, but also that has been invested along the way into companies that then produce the products that they need when they're old. And as we all get older, there's literally thousands of terminal diseases that we need cures for, treatments for, and that costs money. And the government's not doing all of that. So biotechnology investment to support your old age is necessary, and that means you have to save from birth throughout life, and those savings need to be invested in the economy to create the products you need, whether they be medicines or whatever else, for when you are older, over the age of 60, 70, whatever it is, right? And at some point, you leave the workforce, or most of us do. Now, that seems simple. That's what we should all do, but we don't. And it's because our parents weren't taught necessarily to do it in school. They didn't necessarily have financial literacy week in, week out throughout primary and secondary school, although they would have needed it. And they hadn't necessarily been saving from birth. Now, there is a lot of talk of wages and taxation of wages. So wages that you earn, your conditions at work, and taxation. And Karl Marx fed into that, and Adam Smith had a lot to say about it. And certainly, that's a very big topic. But it has been over-discussed for 200 to 300 years. to the exclusion of basic saving from birth and financial literacy in schools. And if you start saving when you start working, you have lost the first 20, 25 years of your life, right? Or maybe 15, but certainly 15, 20, 25 years from birth. If you haven't been saving, there's going to be a problem. Now, some of you may know that there's a number that if you save between 19 and the age of 26, and then you stop saving, and then another person starts saving in exactly the same way from the age of 26, the person who starts saving first will end up with more money when they retire, even though they only saved for 7 years. And that's because time is the ingredient that matters, right? And the compounding of interest. If you invest in exactly the same way, a bank account with, say, the same interest rate, right? Now, that's an extreme example, but it shows you the issue. You must save. And time is the important component. And you must have financial literacy, because it doesn't matter even if you've got a good wage and good conditions. You also need to know how to deploy that capital, because you receive wages for your work, right? Or dividends from your investments. And that money must then, however good it makes you feel, you must then use it to convert into utility. So you take your cash, you take your money, and you spend some of it to pay your bills, you invest a bit, you save a bit. And that requires knowledge to balance those three things: saving, investing, and spending. And that's got to be learned at school, so you can learn muscle memory. It's a necessary part of school. We need to be taught that, the basics anyway, so that you can leave school with an understanding of what debt is, what a credit card is, what a home loan is, car payments, shares, equities, insurance policies, mortgages. The list goes on. You cannot be just learning this stuff later in life. You must have some instruction at school, basic instruction, and you must have basic saving from birth, so that there's enough money in the economy to invest in the companies that will produce the products for when you retire, and you have your investment savings to draw on. Now, saving from birth won't stop your need to work. You will need to work, but it means you're not losing 20 years of saving time. You're not losing 20 years of investment time that is necessary to build the companies, to make the products that you will need when you retire and get older. And I'm not the only person who talks about this. People have cottoned on to this. But the key issue here is this is what's gotten wrong with capitalism. We can talk about wages and better working conditions for workers and proper rates of taxation until we're blue in the face. And we probably should. But we must not talk about those things to the exclusion of basic saving from birth and financial literacy in schools, without which an economy cannot work. And this is the issue. And those topics, wages, working conditions, taxation, they're very seductive topics, as they should be. They're very important, seductive to talk about. But they must not exclude, they must not crowd out universal basic saving from birth, which is necessary, and financial literacy in school, because we have to save enough money to invest in the companies to produce the products that we will need to buy when we're older, plus we need the savings and the investments from that early saving. And we must have the financial literacy that allows us to deploy our spending and plan our payments, plan our purchases, so we are sentient about what we do with our money once we have it from saving and or from wages. That is essentially the problem, the main problem with capitalism. Money has not been properly deployed. It's been mistaken money. Yes, there's been too much easy credit. Rashir Sharma's correct about that. Yes, central banks have been relied on too much. Yes, there's been fiscal issues as well. Deficit spending has been relied on instead of being just relied on in a crisis. It's become the norm. All of those things are true. But the gaping hole, the issue that people don't talk about enough, and it is number one, is universal basic saving from birth and financial literacy in schools. Because without that, you do not have the foundation to then work on later. And of course, if you don't have universal basic saving from birth and financial literacy in schools, then you will end up with a government and a central bank that is always intervening fiscally by the government, monetarily by the central bank, because you don't have that safety net of muscle memory of individual consumers who've had savings from birth and financial literacy in school to act economically in the marketplace as individuals with that background of understanding and savings behind them. So the safety net can't just be the government. It cannot just be the central bank. It must be individuals, citizens who've had basic saving from birth, basic, not a lot, but also financial literacy in schools. It's a team effort, and that must include individuals with proper savings from birth and proper financial literacy in school. And that will make, with other things as well, that will make an economy work and make capitalism work. Please tell me what you think. Thanks.